This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com.
Hey, everybody. Welcome back to the Investing with the Whales podcast. I'm your host, Jonah Lupton. Really excited today to have our guest, Larry Tentarelli, with us. Larry, how are you?
Great, Jonah. I'm doing well. Thank you. How are you?
I am good. So before we start off here, you do run a website called bluechipdaily.com, right?
Yes, I do.
What is that all about?
Now. What's that?
What is that website all about? What do you guys offer on the website?
So Blue Chip Daily, what it is, it's a subscription service. It's a daily newsletter video format. So I've got a private Twitter feed. And basically what I specialize in is large cap stocks, $10 billion and higher. So maybe about 800 stocks, about 50 or 60 high volume ETFs, the indices, some specialty ETFs. And then we've got an active traders page where I'll focus on the mid caps, 2 to 10 billion. I post on the private Twitter feed all day, every day. I post intraday technical alerts for active traders. And then at the end of the night, I go through a daily video, about 20 minutes, and I talk about charts that I think are set up well.
Okay. So you're more of a trader than an investor, correct?
I'm in the middle.
Okay.
So my in a good market, in a bull market, let's say, a nice uptrend, my ideal holding period is probably 3 to 6 months, right? So in
like that kind of like a position trader.
Exactly. That's exactly what I am. Yep.
And what about in a bear market or sideways market? Do you typically sit on cash or take smaller positions or tighter stop losses? What changes in this sort of a market that we're probably in right now?
Good question. And the answer is everything. So I've got a lot more cash than I would like to have. Unfortunately, I've got a shorter time frame for some of these positions because, as you know, charts start to break out and then they turn around. Powell says something, the PPI comes up. So, unfortunately, my holding period is a lot shorter right now. I've got a lot more cash. I keep my stops about the same, but I'm much less active right now because the markets are pulling back and most of the charts on my screen are pulling back right now. Now, I do think we're going to get a chance to buy, I don't know, this tomorrow, next week, in the next week or two. I know what I'm looking for on the charts, and when I see it, I'm ready to buy.
So what are you looking for? You're looking for stocks that are breaking out to new highs? You're looking for stocks that, like right now, I'm focused on the companies that gapped up after Q4 earnings, gave strong guidance, and now they're pulling back to their 10-day, 21-day, maybe a VWAP, and that's where I'm looking to get in. What are you looking for right now? What's your ideal setup in this kind of a market that we might see in the next couple of weeks?
I focus on two types of signals: base breakouts, either from a range or to a 52-week high, and moving average reclaims, primarily the 200-day moving average. Okay. So now what's been a little bit of an issue recently is we were in an earnings period. So there were some stocks like Spotify that came over the 200-day, Airbnb came over the 200-day, and I had them on the watch list, but because they were going into earnings, I didn't want to take that position, wind up like Shopify, down 20% the next day.
Right.
So I've got a lot of stocks that, just like what you're doing, I've had Spotify on watch, I've had Facebook on watch, I've got Airbnb, and all that I'm looking for is primarily for the short-term signals that I use to give me a buy signal, but also for the index to start to flatten out. Because what happens is stocks can break out even when the index is pulling back. Mercado Libre broke out over the past few days. ACLS broke out. But if the general market's pulling back, I think it makes it a lot tougher for individual stocks to hold their breakout. So if the market at least flattens out or turns up, and then these stocks break out, I think you get big breakout moves.
So do you ever hold stocks into earnings?
Yes. Yeah.
So typically if you have a cushion, I assume.
Yeah, that's a good point. So if I have a cushion, or if the stock is acting okay, if I'm down in the stock going into earnings and the chart is weak, I'll usually sell the stock beforehand. But if I've got a cushion going in, or if the chart is holding up well and I have a cushion, then I'll hold, like I've got AMD, and I held that into NVIDIA's earnings, knowing that if NVIDIA tanked, AMD was going to tank too. But if it's a secondary, I look at my positions, I've got some core names, like I've got ExxonMobil that I held into earnings. That's a core name, AMD, NVIDIA stocks like that. But if I'm in a secondary stock and I don't have any real attachment to it based on the chart, then I might cut it. And it's based on the market environment too.
And what do you do? I mean, nowadays you did, you mentioned it, macro is a headwind, and macro is creating this volatility around these data dumps. You get CPI, PPI, CPE, the jobs numbers. It's like every other week we have this big data point that could throw the markets into a hissy fit. So what do you do? I mean, if you have 5 or 6 positions in your portfolio and we're going into CPI tomorrow morning, do you hedge? Do you trim the positions? What's your strategy going into these macro events?
It's a good question, and it's a very tough market environment. So basically the way that I hedge is through my cash balances. So what I found out is I do better when I focus on just the long side. I'm not as good on the short side. And I found that when I'm short, I often develop a short side mindset. And then what happens is I miss some very good entries on the long side. So I'm personally not good at long and short at the same time.
I'm the same way. I suck at shorting.
I do much better. Like, right now I've got too much cash, right? I've got over 80% cash.
Oh, wow.
And it's too much, because when the market turns, it turns quickly, and then you have to try to put all that money to work. So, but I found it better for me to just sit here. I've got, off the top of my head, I've got probably 10 or 15 charts that I'm really dialed into all through the course of the day, that I'm just waiting for a buy signal there, buy signal from the market. But that's really how I do best is in this environment. And I don't like it, because the problem with this environment is your charts don't follow through the way that they should. You can get some really clean breakout signals, some really clean moving average crossovers, and then the PPI comes in hot, and then your breakout up 4% is down 6%. It's difficult. And that's why I'm just holding more cash.
I've had a couple of those. I mean, even a couple of weeks ago, I bought Wingstop on a breakout after earnings, and blink of an eye, the thing reversed and put in, one of the ugliest candles I've seen all year. I mean, the breakouts aren't holding. How was your strategy changed? Like, so let's go back to 2020, 2021, pretty nice bull market, low rates, easy money, market was ripping higher. Will you get really aggressive and go above 100% exposure?
I won't go over 100% exposure, but I'll carry some pretty aggressive names. So, 2020, you name it, and 2020, 2021, when things were working, I had Roblox and Shopify, AMD, NVIDIA. I think I had Teladoc. I had Chinese internet stocks. I was,
I had all the same ones.
Yeah. It was just all the momentum.
Because they were working.
Stuff. Yeah. Roku. I had C, at any one time, I might have had, 15 positions, and 10 of them were, Roku and C and NVIDIA and things like that. And I'm not there in this market right now. And the problem for me with those stocks right now is because I use stop losses, is they can reverse through those stops. You know, some of the ranges in these stocks, like, you know, whether it's Roku, you see Shopify had maybe what, a 25% pullback. Even Roblox, you know, Roblox will trade from 35 to 50 to 35 in like 2 weeks. So I'm picking and choosing. I'm a little bit bigger with my market. You know, stocks I'm more focused on now, AMD, NVIDIA, Airbnb, Facebook. Those are more on my watch list right now.
And they have a lot of liquidity too. So you have tight bid-ask spreads. You can get in and out of positions pretty easily.
Right. You know, some ETFs, like I've got the cloud ETF WCLD, because I'm not going to buy, there's a lot of those stocks. It's got Toast. You know, I think Toast was down, whatever, 20%. You know, I can't, because of the way I manage my positions, I can't get into those stocks right now. But the ETF, and it's similar to ARK, you know, that the cloud ETF it's a little bit less volatile than ARK. But now 6 months, a year from now, if we get past the tightening cycle, you know, let's say at some point the Fed is going to come out and they're going to say, okay, we're done. And I don't know when it is. It's, you know, we're in February. Maybe it's December. Maybe it's September. I have no idea. But in 2018, after they hiked, you know, 8 times over 2.5 years, Powell finally came out. I think it was December 21st. And he came out and he said, no more rate hikes. And that was the bottom in the S&P. And then it was straight up from there. So at some point they'll do that. And when we get back into a lower volatility, you know, uptrend, I'll be back in things like, you know, apps and Roku and all that stuff. But right now,
you'll get out of the larger cap names and look for some higher beta names.
I'll do a little bit of both. You know, I'll still focus on the NVIDIAs and things like that, but I might move into the mid caps. You know, like this super micro. I don't have super micro. It's been a heck of a performer. We've had it on our active traders buy list for about a month now. But I just, in this market environment, I can't get into a position like super micro because I could get stopped out in one day. And then the next day it's 10% higher.
What is a typical stop loss for you? Let's say you did get into Airbnb or Spotify. Where would you typically set your stop loss? Is it 4, 5, 6% below, or are you buying these stocks as they're bouncing off a moving average? So you're putting your stop loss below the moving average. How do you typically, what's your risk management strategy?
It's a good question. In this market environment, it's normally a set 10%.
Okay.
Now, if there's a moving average that's, you know, 11% below or 12% below, then I'll do that. But because of my longer time frame, I'll generally run 8 to 10% stops, maybe a little bit wider. Now, if I was swing trading, you know, something like that, when I swing trade ETFs, and I'll do that from time to time in this market environment, it's generally a 5% stop. You know, like I'm looking at triple Q right now, and I think it closed at 292. 292, 293. So on my chart,
and if you want, I can give you screen sharing capabilities, and you can share your screen at any point if you want.
Okay, yeah, that sounds good. We'll do that.
So you should be able to share it now. So yeah, feel free to pull up any charts you want.
Okay, we'll go here.
What charting service do you typically use?
I just use for my posting and what have you. I use stockcharts.com.
Okay.
For the website, because it's easier for me to share this with members. But just quickly, and I'll make this chart a little bit bigger so it's easier to see. But so can you see my screen?
Oh yeah. Yep.
So, you know, I'm looking at triple Q right now, but if I was to take a position in triple Q, whether it's today, tomorrow, Monday. If it's a swing position, 285 is my line on the screen. It's right underneath the 50-day, and there's support between 285 to 295. So if I get a buy signal in triple Q and I decide that I want to take a speculation with it, I'll just set my stop right under 285, and it might be, not even a 5% stop, but it's really based on the time frame for the chart and the position. But for the most part, I'm going to run about 10% stops on average.
Okay. What was your strategy last year when we were in a downtrending market?
It was tough. I got stopped out a lot. It was, it was tough because there was a lot of signals on my chart that gave some good breakouts in July, August, and March, and they both failed. There were stocks coming over the 200-day, the index, but last year I got stopped out a lot. And the only way that I could really counteract it was, I had some big winners in there too. I was in energy very early. I made, over 100% in Devon Energy and 40% in Chevron. But I had a lot of stops too. But what happens is as the market got more volatile, I think I was over 50% cash when the war started in February. I went to over 50% cash, and I let the newsletter members know, I'm over 50% cash right now. And I was anywhere from 50% to maybe, 70% for most of the rest of the year. My position sizing was smaller, but I had a lot of stops get hit. It was what it was.
So if you're starting positions in a market like this, what is your typical position size?
Right now for stocks, it's about 2.5 to 3%. For ETFs, it could be up to 5%. And that's about it right now.
And then when do you add to them? What sort of signals do you look for in order to add to an existing position?
So it's based on how the chart lines up. If I'm only going in, like I took a few positions recently, and they were smaller positions, Morgan Stanley, AMD, Boeing. I got stopped out of Boeing because of their airline problem. But I'll start these at 2.5%, 3%. And I tell members, I might get this position up to 5%, but I want to see how the volatility plays out. And right now on my charts, and I'm going to move you just so I can see you a little bit better. But right now on my charts, the indices are in a pullback phase, and probably 70% of the large cap charts I look at are in a pullback phase. So I use some shorter term oscillators and momentum signals that I don't share. I keep it to myself. I don't tell, but they've served me pretty good over the year. Everybody's got their secret sauce. But right now everything's in a pullback phase for the most part. So I'm just waiting.
How do you typically come up with your watch list? Do you do specific screens looking for specific criteria? I assume that you also look at fundamentals, not just technicals, although correct me if I'm wrong.
Yeah, so I start with relative strength. So
Okay.
I run a couple different screeners. Relative strength is my first screener. I look for stocks making new 50-day highs, stocks making new 52-week highs, stocks coming over a 200-day moving average or a 50-day moving average. I don't look too much at fundamentals realistically. I just don't.
So you focus on price, relative strength. I assume you look at volume.
Yeah, volume, what's happening on the chart. But there's a lot of stocks. Some of my best performers over the years were stocks that, weren't making any money at the time. Some of these cyclical stocks, like these steel stocks, 2 years ago, these energy stocks were pretty beaten down. Now, if I'm looking at growth stocks, I do look at their sales growth.
Yep.
So if I'm looking at 2 or 3 cloud stocks and the charts are about the same, and one's growing their sales, 40%, and one's growing their sales 15%, I'm generally always going to go with the faster grower if the chart's the same.
Show us a couple of charts. What are a couple of stocks that are in your watch list right now? And what do you like about the chart, and what would get you to start a position?
So Airbnb, I've got this high on watch. So Airbnb, I had a position. I made money on Airbnb maybe a year and a half ago. I forget when, when everything was higher. But so it's been on watch for a while. When it came over the 200-day, that's what put it back on my radar screen. And if it wasn't for that they had earnings coming up, I would have taken this Airbnb position somewhere probably in the 115 to 120 neighborhood once it came over the 200-day. But I didn't want to take it into earnings. I was worried any of these stocks could drop 20%.
Oh, yeah.
So it gapped higher without me, from 120 to 144. So, luckily I sat and I didn't go after it at 144. But now it's come down. It's filled this post-earnings gap. It's filled it primarily on lower volume than the breakout. It's right at the 20-day moving average. This for me is a very, very clean setup that if the markets themselves weren't in a sharp pullback phase, this would be higher on my buy list right now. But like I said, what my concern is if the markets keep going down, it's going to take most stocks with it.
So I started a position in Airbnb on Friday when it bounced off the 20-day.
Yeah, I think that's an ideal. If the only thing we did was looked at this chart and I didn't take, and I might overthink it, but I think coming off the 20-day with that gap fill, I think that's ideal.
Yeah,
now it's just a matter of, does the market hold up? Spotify is almost the same concept. I was in Spotify a while ago. It's been under the 200-day forever. It came over the 200-day, and this would have been a buy signal. So I made this. This was our members chart of the day, I think, when it was coming over the 200-day, but it had earnings coming up. And this is not the market environment that I wanted to speculate into earnings. But if it wasn't for earnings, these couple closes over the 200-day would be the buy signal. Once again, it broke out without me. So now, I can't go after it, especially with the RSI up over 80. So now it's just a waiting game to where I'm waiting to see. There's a lot of good things on this chart. Bullish 50 200-day moving average cross. The 200-day moving average is starting to turn higher. I've got this very high on watch. I've got Facebook these are all the same story.
What is, just real quick, what is your sweet spot for RSI?
60s, mid, 60s rising, because what I found is once you get over 70 and into 80, you kind of get it at the top end of the range.
So that's where it's sort of overbought in your opinion?
To a degree, but I've seen stocks, it's based on the size of the stock. Like if you look at Spotify, it held that RSI over 70 from 95 up to 128, but then you had a divergence where the price made a new high, but the RSI was declining. So these are growth stocks that all I'm waiting for right now is to see what happens. And realistically, I'm in the camp that what happens in the bond market is going to dictate what happens in the stock market, because bond yields.
Right. I mean, the 10-year Treasury at 3.95 is
it's
not great for stocks.
It's put a lot of heat on stocks. January was a great month for the S&P. And if you look at 10-year bond yields, 390 to 333. Bond yields went down, stocks were straight up. February, everything turned on its head. Now, 4% is not going to be easy. So if bond yields start to ease a little bit, if triple Q starts to give me some signals, if the S&P, I'm ready to go. I've got a lot.
If the next CPI report comes in cool, that might be kind of the signal we need, where the 10-year might be heading back down to the 350 range.
Yeah, very possible. And even without that, if the shorter term signals on my charts start to turn up, then I'm going to get a lot more aggressive. When I look at Meta, because I'll tell you, it's tough. And you know this because you've been doing this for a while. I watch Facebook. So generally, I won't take anything in this market environment underneath the 200-day moving average. So, you watch Facebook hit the 200-day, and that was the earnings day. It popped 20%. And then you're looking at Facebook 20% higher, and you're like, I missed it. But now I've been waiting on this pullback. There's a lot of good things happening on the Facebook chart. They're talking about AI today, but what
are your thoughts? Will you buy a stock even if the gap hasn't filled yet?
Yes.
Okay.
Yeah, because I've seen, this Facebook gap hasn't filled. And if you looked at Netflix, I think Netflix there was a couple gaps. So the first gap filled on Netflix, but there's been a few charts where they've gapped and just gone. So it's really based on the market environment. If triple Q, because it's pulling back now, but if triple Q starts to turn up, I don't think Facebook, fills that gap for a while. And it's a calculated risk that I'd be willing to take because it's given back enough. It's given back 50% of this move. Now, obviously, I don't want to buy it at 197. And that was another situation where the RSI would tell you in the short term, an 80 RSI on a stock Facebook size. This is a lot harder to work with, but you could get a stock that's $20 billion market cap and the RSI could go to, 90.
Right. Like pull up LNTH. That's my second biggest position right now. I bet that has a high RSI. Yeah.
Yeah. But here's the thing with a $5 billion market cap, that high RSI wouldn't bother me as much as if it was 500 billion.
Because it takes a lot less to move the stock higher.
Oh yeah. If Fidelity decides they want to build a position or, American funds, and that's how these trends get started, because the RSI on there looked like it was pretty high. Let's see what happened there. So the RSI, take a look at it. The RSI was 90, right? We just talked about this. The RSI was 90, the stock was 50, and it proceeded to go up to 87.
Yep.
So in these smaller market cap stocks, that overbought RSI doesn't bother me as much as, if it's Facebook with an 80 RSI.
Which is where I play more in the mid-cap space.
Yeah. Yeah. And I'll get back more into the mid-cap space once the, when the market tone changes, I'll get more into that space. But like I said, it's just because of the way I run my stops. It can be tough on my stops.
Yeah, I mean they're more volatile, and I mean you get an analyst downgrade, and the stock could drop 5% just on one analyst downgrading the stock.
Sure. Yeah, I mean I had Boeing the other day, and Boeing, this is the thing about the markets, that no matter what happens on your charts, they can turn quickly. So this Boeing, I took Boeing. It was a base breakout. So I bought this breakout right here. It consolidated. It was over all the moving averages, rising 50-day moving average, relative strength was moving. Everything lined up on the chart just right. And it still didn't work out.
Right.
It pulled back. And because when I saw this breakout bar and it was a high volume move, that's exactly what I'm looking for. Everything on that chart lined up right. didn't work out. It went to the 50-day, got a nice bounce. And then they came out with their, their airline delay problem, and it just didn't work out. And the thing that, sometimes you look at what you could have bought, the other stock on my screen, the exact same day was GE.
That's a nice looking chart too.
It's a great chart, and the GE chart was just below the breakout. So at the time I had Boeing breaking out on volume, and GE was just below the breakout. So I took the chart that's breaking out, Boeing gets stopped out, GE makes a new high. That's just how it works.
And just looking at the chart for GE, I mean, it looks like it crossed over, reclaimed the 200-day in about November, and then in December came back and bounced off it perfectly.
Yep.
Now, if you're buying or if you're focused on stocks when they're reclaiming the 200-day, do you typically buy as soon as it crosses over? Do you give it a couple more days and see if it comes back and back tests? What's your strategy for buying stocks as they cross over the 200-day, assuming that you don't have any earnings on the horizon?
It's based on the chart. Very often, based on how the chart lines up, I might buy it just on the close over the 200-day. I'm going to take a look at how the other things line up on the chart, but one close over the 200-day is fine. Some people like to wait for two closes. That's fine too. But really, one close over the 200-day, what matters is how long has it been underneath that moving average. So if it's just choppy, like if it's, over, under, over, under, over, under, I don't pay that much attention to it. But when it's a stock that's been under the 200-day, like we'll go back to Spotify for a second. And Spotify, I think, has been under the 200-day for, maybe 2 years or so. So,
oh my God.
So it's been under the 200-day since December 2021. So it was 13 months. The longer it spends underneath that 200-day, the more relevant the final close is back above it. Because what the market is saying is that for 13 months, we weren't taking this stock over the 200-day, but then now something is different. And now when you look at the chart, you're over the 200-day, you've got a bullish 50, 200-day cross. There's a lot of very good things on this chart right now. It's over a lot of support. And if you take a look at where the stocks come from, 380, 305, there could be some upside, in that chart. Look at TWLO, which I don't have TWLO, but we're just talking about growth stocks right now. But if you look at TWLO, it's been underneath the 200-day October 2021.
It gapped up over the 200-day on earnings and then couldn't hold it.
But now it's, see, I'm watching TWLO, but not as closely because I've got this in the ETF, but this is actually a clean setup where it gapped over the 200-day. It came back and it filled that gap. It held the 20-day. It's got a rising 50-day. If this stock comes back over the 200-day moving average, that could be an ideal setup. But a lot of this with these ARC type stocks, it's really going to be based on what happens with triple Q. If bond yields roll over,
and yields, right? Yep.
Then TWLO's up another 20 or 30%. But to me, it's very relevant when I see stocks, and there's just a ton of them. Cloudflare.
Right. I was going to say the entire ARC portfolio, all the charts look like this. They all spent a year to 2 years under the 200-day.
Yeah. And now that, they're coming out of some stage one bases. So, I've got Cloudflare on watch. They just had earnings. And like I said, I've got this cloud ETF, and this is just a small position. I think I've got 3.5% in the cloud ETF right now. But if you take a look at how long that was under the 200-day, it just looks like all those charts.
Right.
So 200-day is starting to flatten out there. But this is, I've got 3.5% of my money in this cloud ETF right now. If this starts to turn back to the upside, I could add to it. I've got cash
And
ready
where
to
would
go.
where would your stop loss on this be? Under the 50?
It's under the 50. Yeah, I think I've got, off the top of my head, I think it's a 10 or a 12% stop. It's underneath the 50-day moving average. But these are the growth stocks that I'm looking at. I'm also looking at industrials. If you look at Rockwell Automation, that's an exceptional chart. So what I want to do in this market is, industrials right now, I ran a screen tonight. There's 28, I think I've got 26 or 28 large cap industrial stocks within 5% or less of a 52-week high. These are charts. If you look at this longer term chart, these industrial charts, that's a clean uptrend.
Yep.
If you take a look, Ingersoll Rand, they're just all over the place, these industrial uptrends. So what I want to do is in this market, I want to mix my positions where I've got some stocks that are very close to breaking out to new all-time highs. And then I've got some stocks that are maybe some longer term recovery ideas like that cloud ETF, Spotify, something like that. So I'll generally run half of my money in growth and tech, and then half of my positions in boring stocks, Exxon, Boeing, GE, things like that. So I think right now I've got 5 positions, and I've got 2 tech positions. I've got a bank, I've got an energy stock, and I got bonds.
You think RSI, relative strength, is more important right now as the market pulls back? You get to see which stocks are holding up the best, and then you would expect them, if the market turns, those are the stocks that would lead us higher?
It's tough to say. I would say the charts, yes, but a month ago, the strongest relative strength stocks were China Internet, gold miners,
yep,
copper, and then they got turned on a dime because the dollar, you look at Freeport, big breakout, high RSI, but then when the dollar turned, all these stocks turned down. But where I'm looking right now is, other than the growth stocks that you and I talked about, charts like JP Morgan, charts like these industrials. But as I start to build my positions back in, let's say it's Wednesday or Thursday or Friday, and I get some buy signals, I'm going to look to add, maybe some tech, and then I'll look to add with the other position. It might be an industrial stock or a steel stock, or I don't want to get 100% in tech stocks in case, because in case we just get another a redo of 2022, because tech could roll back over. And then you look at these banks and industrials. Energy was great for the first 6 months or so of last year, but so I'm going to balance out what I'm buying.
When do you know when to trim a position or sell a position? Obviously, if you get stopped out, that's a little bit different. But will you just keep holding it and raising the stops at some point, or just use a trailing stop along the 20-day or 50-day?
I've been, that's a great question. I've been more active here, like Taiwan Semi. I had a position in Taiwan Semi, and I sold it pretty quickly, and I made money in it before it unwound. But the high RSI in Taiwan Semi, see, it's $450 billion stock, and I got into it. So it went on my radar screen before earnings, it gapped higher, and I bought this red bar.
Okay.
So that pullback day after the earnings gap is when I bought the position. It went straight up from there. I wound up taking some of it off the table because it was just overbought, and I didn't want to. I'm not geared to take 5% profits and 8% profits and things like that. I'm looking for 20, 30, 40. I'm looking for much bigger moves. But because of the volatility, of this market environment, I've been forced to take some gains at, 5, 8, 10%, because, an 8% gain today might be a 3% loss next week.
Right. Now that TSM is pulling back to the 50-day, do you get interested again?
I might, if some of the signals start to turn up on it. I'm really interested in NVIDIA. So to me, I made a lot of money.
And the NVIDIA chart looks a lot better than the TSM chart.
It does, and I know they did a secondary tonight or something like that. But,
they did? I didn't even see that. Oh, okay.
Yeah, I think it was down like 2% when I looked, but I made a lot of money in NVIDIA over the years, especially 2020 coming out of the whole COVID thing. And then I got stopped out of it, once or twice last year, fairly small positions. But NVIDIA, same thing. I told myself, because here's what I did. I bought NVIDIA at some point last year, and I forget when, but it was a month before earnings. And I said, okay, I've got a month. It'll do what NVIDIA does. It'll ramp up. And then even if they miss earnings, I'm still going to be ahead of the game. Well, they pre-warned like a month early.
Oh, yeah.
Yeah, they pre-warned. And I actually think it might have been somewhere in here. But after that happened, and then I had a position in Snowflake, and I just told myself, I said, I'm not going to take, in this market, I'm not going to buy a stock ahead of earnings, because I bought NVIDIA a month before earnings, figuring I was good, and they pre-announced.
Yep. So, there's been a few of those in the last 6 months. We've had a few of those.
Yeah. So as a result, I missed this run up, because this coming over the 200-day, and I posted it, and I had this on my members website since 180. And the way that I operate with my members is I don't do the thinking for people. I don't tell people, Jonah, you should do this or you shouldn't do that. I've got long-term people, I've got active traders, I've got day traders. So I'll post the setup. And if somebody's comfortable buying a stock 2 hours before earnings or 2 days or whatever, that's up to them, because some people are. There's a lot of people that front run earnings, front run call options and things like that. But in this environment, so I've watched it break out. It pulled back last week. It didn't give any opportunity, after that gap. But I think if triple Q turns, then I think NVIDIA, of all these, of the big name stocks, Apple, Microsoft, Google, maybe Tesla, if Tesla can clear, the 200-day moving average, Tesla's got a very nice chart that's setting up if it can clear the 200-day. But I really think if we get any type of a tech, move again, I think this AI theme is pretty big. And I think NVIDIA, if you're an institution and you can buy Apple, Microsoft, Google, Amazon, or NVIDIA, which one's going to give you the best bang for the buck? Probably NVIDIA.
Definitely NVIDIA. Yep.
Yeah. I mean,
if you're maybe Meta, maybe Tesla, but right. I mean, Apple and Amazon are in a lag.
If I've got because I look at these stocks all day, and if I look at this Amazon chart, it can't get over the 200-day. And you look at the Google chart, Google's buried. And I think I don't think Google's going out of business. I think they're going to figure it out. And I think we'll probably look back in a year or two and say 90 was a screaming buy, but right now the chart just can't get out of its own way.
Is this a stock you would buy if it got above the 200-day, or is the market cap too big?
No, I would definitely consider Google. I've been watching Google. The market cap doesn't bother me. I want to look at the risk-adjusted return and say, there's 800 stocks on the screen, and I can only hold 10, 12, whatever the number is. So if I buy, I could buy NVIDIA or I could buy Microsoft, which one. So in this mega cap space, NVIDIA is where I'm looking. Obviously, it could pull back. and fill this gap, especially with this secondary. You know, maybe it comes down to the 20-day, but I want to focus on the strongest stocks. If I'm looking at these tech stocks, you know, Palo Alto Networks is a very nice chart. It's early, the past 2 days, it's been up like 2% right away, and then it's faded. But this is coming out of a very nice price base that I think if this stock, if triple Q turns up, I think Palo Alto makes new highs. You know, so I would rather in tech, I'd rather focus NVIDIA, Palo Alto, you know, maybe Facebook, Spotify, those charts we've talked about, and not so much, you know, Microsoft, which I think is just, I think you could buy triple Q and it's almost the same thing.
What's been your favorite market, or is there a particular year that stands out as your favorite year for trading?
2020 was a lot of fun. 2009 was a lot of fun. I really developed my strategy in 2007, 2008, 2009, because what had happened, I started trading in 98.
What, were you trading housing stocks and mortgage stocks then?
Well, I shorted in, this is great. In 2008, I was short everything. The problem is I hardly made any money because I was so short. I was short Citibank and Countrywide Financial and Americredit. I was short Lehman Brothers. The problem with it, what I didn't know at the time, was I didn't know position sizing and risk management. And what happened is those stocks, I remember I was short everything. And one day Countrywide gapped up like 20%. And I covered a bunch of my shorts, and that was the very high of that move. So because I had like 10 short positions, I got run over. Whereas if I would have had, you know, 1 or 2 or 3 shorts, I would have sat in them, you know. So, but that's where I learned a lot about, you know, not getting greedy, more about position sizing. And then coming out of 08, 09, I think I bought SPY, emerging markets, and a metal stock. And they just were straight up. And that's how I pretty much learned about, you know, how to follow the trend and not get over it leveraged.
Will you touch China stocks? I mean, I know you mentioned earlier that, you know, China stocks had a nice move earlier this year. Maybe it was the end of last year into this year.
Yeah.
Okay.
So I made money a couple of years ago. You know, Alibaba, KWEB has always been on my radar. Alibaba. I just got stopped out of KWEB because I bought this breakout, and this was another chart. It was just a clean base breakout, and then they had the balloon, so it gapped down, it gapped back up, and then the dollar reversed. And what you'll find is the dollar. So if you take the US dollar here and China stocks and gold miners in the other bucket, they're going to move just the opposite of each other. So yeah, I will definitely buy China stocks again, but I just need to see, because the KWEB chart.
Do you like buying individual China stocks, or is that where you'd rather buy the index?
At this point, I'd rather buy the index because, you know, I focus on the big names. So Alibaba, Tencent, and Pinduoduo, PDD.
Yep.
But they, you know, these are, you know, they can gap down 10 or 20% too. So I'll stick with the ETF in China. But yeah, I think that there's the China reopening, it's going to happen. But right now, the US dollar has just put pressure on anything that's overseas, especially these emerging. But, you know, look at Alibaba. It's a 25 daily RSI. I think if we go back and look at all these other sub 30 daily RSIs in Alibaba, they usually led to a pretty quick bounce. Now it's just a matter. But yeah, I will have a position again in KWEB. It could be, you know, a week or a month. I'm not sure.
Do you ever play that game where you're trying to buy a stock when it looks oversold and might be due for a 2-week bounce?
You know, I tried that with triple Q last year when when the oscillator was the most oversold it had been in it was like the fourth most oversold, but I was early by like 2 weeks. So I've stopped doing that because I've seen oversold get more oversold,
right,
or just enough at least to go through my stop. So if we see this 25 daily RSI, what I'd rather see, and we'll just use Alibaba as the example, but instead of just trying to buy into the low, I'd rather see it, with a sharp move, maybe back over that 200-day. And then I don't have to buy the exact low. Right. I can just get that momentum on the way back up, because I do think the China stocks will be buyable again.
Okay. Yeah. I mean, I haven't touched a China stock in a while. So I was sitting on the sidelines when they had their big move, but I think BABA moved over 100% off the lows.
Yeah. And then it's retraced, 60 to 120. So it's retraced probably 50% right here. But the whole move with China is all going to be the US dollar, because you can see it topped out when the end of January. And if you look at UUP put in the low 1st of February, and then it's been straight up since then. The dollar right now is a little bit concerning, because the dollar's a good chart. It's, it's testing the 200-day. It's got a bullish 50-day cross. There's a lot of good momentum on this US dollar chart. And if the dollar chart keeps higher, I think bond yields go up and then China stocks go lower. So we really want to see the dollar go lower and roll over.
Right. Along with yields too.
Yeah.
What advice would you give to a new trader?
A lot. Number one, under trade. So do everything less. So, have fewer positions, take smaller positions, try to hold positions longer, as long as you're following your stops. I remember a couple of weeks ago, because I'm on Twitter all day, and I think it was like right at the top for the recent top for Triple Q. And I remember seeing a couple people that I know were like all in on the ARC stocks right there. And yeah, and I just know that that's not gonna end well, So I would rather, be a little bit right than be a lot wrong. And this is the market environment. This is a tough market environment to try to be, all in 100% on ARC stocks, So I would say under trade and don't try to do everything. Everyone's got a different personality. You're very good at your style. I'm very good at my style. There's a third guy who's very good at his style, but they might not be the same. They might be different stocks. I buy breakouts. There's a lot of guys that buy oversold, pullbacks, and they're good at it. But I think everyone needs to figure out what's your personality, and then, focus on that. Don't try to be a swing trader and a day trader and a position trader and a breakout trader and an oversold, dial into something, whether it's growth stocks, whatever, and then just focus on that.
Great advice. I know I made that mistake this year because we got off to such a great start. I then, and I was over trading in January, but it was working. And then you get into February, market starts getting choppy, market starts to pull back. I'm still trading at the same volume and just getting stopped out of everything.
Right. Yeah. And that's, the difficulty with this market is the charts, Triple Q, it got to be overbought on the daily RSI. It was over 70. I think it hit 72 at one point, but the chart trends were setting up very well to where we should take more risk. Because what I want to do is I want to, when markets are going down, I want to have less exposure because I don't want to try to fight the tide. And then as the markets are going up and stocks are starting to prove themselves and break out of bases, then yeah, I want to increase my, we should all, increase exposure. It's just they've been sharp moves.
Any sectors that you won't trade, like biotech, for instance?
In biotech, I stick with the ETFs. In solar, I like to, I'll look at if an ETF can give me a stock-like return. Like, when you look at something like, let's say, the copper miners ETF, whether you buy Freeport or you buy COPX, you can buy this and get a pretty stock-like return, but I'm not going to buy, XLF. I'm going to buy a bank stock.
Okay.
But in some sectors, like in solar, I would be fine buying TAN, although the whole sector is weak right now. But I don't do anything with like mid-cap unprofitable biotechs. Yeah.
I've played that game before, and it's tough. You own a biotech, and all of a sudden there's a patent, infringement lawsuit that pops up, or some regulatory FDA thing, and stock gaps down 40% before you know it.
Yeah, and Jonah, the thing with any stock, I mean, you could get that. Look at Boeing. I was sitting here the other day, and I had on TV, and Boeing, I was under in the position that bounced off the 50-day, and I said, okay, I think this stock is ready to make its move again. And then I see the headline that says, they've announced that they're going to delay their 787, whatever it is. And the stock app's down like 4 or 5%. Any stock, it could be GE. I think Goldman Sachs today, that was down. They had an investor's
day.
Look
at that candle. Jeez.
Yeah.
Didn't they just announce a $30 billion buyback too?
I don't know. They did. I don't know what they did. They had an investor day, but you look at that, and then you look at JP Morgan, pretty much the same sector. Wow. But anytime you're in a single stock, but yeah, and those biotechs, I think it was Biogen.
What does XLF look like right now? I'm just curious, if XLF looks more like JP Morgan or Goldman.
The XLF ETF, it's a tough ETF because I think you can do better with the stocks, like you look at these European stocks, UBS,
that's a nice looking chart, huh?
The Europe financial, that's a nice ETF. If I was going to do something in the financials, I think with XLF, I'd rather just go, I've got a position in Morgan Stanley. It just made a new high. It's pulling back a little bit, but it's got a ton of support, rising 50-day. I'm really not worried about that chart. It held up when Goldman unwound today, but Morgan Stanley is very close to a multi-year breakout. If you take a look at the chart, if it can get through 101, there's a ton of overhead, 100 to 101. But if it can clear that, and if the S&P turns up, I expect that it will.
Cool. I'll keep an eye on it.
Yeah.
Well, Larry, thank you very much. I greatly appreciate your time today. Once again, that website is
Blue Chip Daily. I knew you were going to ask. So bluechipdaily.com. You can go on, if you click on to the CR recent technical alerts, basically what it will do is it will show you recent technical alerts that I put out for members. And it shows you, what is the mindset, what was the chart set up at the time, and you can really learn more about my technical process there.
And how long have you been running this website for?
Since 2019 for Blue Chip Daily.
Awesome. Okay.
Yeah.
This is your full-time job now?
Yep. Yeah, that's it.
Awesome. Well,
and
thank you so much, Larry. I know you're a Patriots fan, so what are you expecting next year from the Patriots with the new offensive coordinator?
I'm always rooting for the best. Kansas City is tough. Cincinnati is tough. Buffalo is tough. We'll see. Belichick usually pulls a rabbit out of the hat, so we'll see what happens.
So if you were Belichick, NFL draft is coming up. I'm not sure when, but it's around the corner. Do you take a quarterback in the draft?
It's a good question.
I mean, not first round to replace Mac, but maybe as like an insurance policy, because Mac Jones is going to be up as a free agent in a couple of years, and they're going to have to decide whether to franchise him, give a new contract, or let him walk. So,
yeah, I think you probably have to. Mac had a good first season. I think he got a bad deal last year because they gave him Matt Patricia as his offensive. It's like having a bond expert running your stock portfolio.
It's like hiring a dentist to be your personal trainer. I mean, it just doesn't make any sense.
Yeah, it was tough. So maybe Mac, maybe they give him I forget who they brought back. I think they brought back somebody, but they brought back.
They brought back Billy O'Brien.
That's who it was.
Yeah.
Yeah.
Who used to be the offensive coordinator, and then he became the head coach of the Texans.
Went to Alabama.
Around. Yep, Alabama. Yeah. So I mean, good. He has experience. He's worked with some great quarterbacks over the years. Let's hope he can. Because I agree. I think Mac Jones regressed last year, but it was a bad situation. So maybe we can see a better version of Mac Jones next year. I'm hopeful.
Listen, I'm not a fan, but watch out for the Jets.
I know.
If the Jets
get Aaron Rodgers, if they get Aaron Rodgers, they've got Breece Hall. This running back is a stud. I think they had the offensive and defensive rookies of the year. Yeah, I think you're right.
Sauce Gardner and this other Wilson. I think if they get a quarterback, watch out.
And there's also talk that the Ravens would franchise Lamar Jackson and then look to trade Lamar Jackson if someone's willing to give up a couple first-round draft picks. So, could always have the Jets go after someone like Lamar Jackson as well.
Yeah, if they get – I've heard about Aaron Rodgers. I don't know if David Carr would go there. I think if you just have a proficient – David Carr almost beat the Bengals in the playoffs, a year ago before the Bengals went to the Super Bowl. I think if they just have someone better than, much better than Zach Wilson, you got to watch out for them.
Or it'd be interesting, Tua from Miami, he's had so many concussions. I don't know if he's going to last in this league or not. If the Dolphins somehow got Lamar Jackson, all the other speed on that offense, you throw Lamar Jackson in there. Oh my God. I don't know how you stop it.
Listen, the Dolphins went to Buffalo and lost to the Bills by a touchdown with a third string quarterback in Buffalo. So football, football is just, I love it. It's my favorite sport, but sometimes you can't figure out. I mean, when the Dolphins went to Buffalo, I figured they're going to get beat by 20 points. Well, I mean, they had a third string quarterback. And they almost won. And San Francisco was rolling with the third string quarterback.
I was just going to say, this was a weird year where you had a lot of first string quarterbacks get knocked out. You had the second or third string guy step in and play better than the first string quarterback.
Yeah. Yeah. Look at, I forget the kid, Brock Purdy.
Yep. Brock Purdy. I think he was the last pick in the draft.
Yeah. Yeah.
Mr. Irrelevant.
If he doesn't get hurt, they might have beat the Eagles. That game was only 14-7 going into halftime before I think there was a fumble or something. But football, I love it. I love the unpredictability because with free agency, you can literally go look at the Bengals. They went from worst to the Super Bowl in 2 years.
Yep. Free agency and draft. I know football is my favorite. I used to love baseball, but baseball is just the game's too slow. The Red Sox are now irrelevant. So not much to enjoy there anymore.
Yeah. Football. I love football.
Well, thank you, Larry. Appreciate it. And hope to talk to you soon.
Jonah, thank you. I appreciate you having me on.
You got it, man. Have a good night.
You too. Thank you.